What is your takeaway as to the circular financing and whether this is a concern?
I think that there's clearly a lot happening, right? And the integration that we're having between the private markets as well as the public markets is clearly something to be watching. It's a space that we follow very, very closely. We think that actually what we've been seeing with OpenAI's relationships is the fact that they're broadening them. They're creating structures that are allowing them to potentially IPO long term. That's obviously something that's been talked about, I think, over the last couple of weeks especially. And what we're thinking when we look at these big companies, so we've got a few hectacorns that we watch very closely, and actually
Hectacorns.
Hectacorns.
Talk us through.
I'm pretty sure it's a term, over $100 billion. That's what we call them. We've got 3 of them in the data set that we track, over 12 actually decacorns that we also track really, really closely in our data sets. OpenAI, Anthropic, xAI. Naturally, right now, at their current implied valuations, they would rank in the top 30 if they were public and in our Bloomberg Benchmark AI Index, which has over 120 equities in it. So the scale of these companies is huge. The partnerships they are forming are critical. And we do think, we're not in the bubble camp, we do think that there's a lot of opportunity down the road as it relates to this.
When someone then sits at a dinner table with you at a cocktail party and they're saying, I cannot see it. Why on earth is AMD giving its stock to OpenAI to seal these sorts of deals? What is your general narrative as to why we can avoid some sort of bubble? Is it just the sheer revenue that could scale for OpenAI, but you do have to have a bit of belief?
Yeah, I think you do have to have a certain bit of belief, right? I think what we've seen is even over the last year, we've seen OpenAI's implied valuation more than double, right? I mean, naturally, a lot has happened in that AI ecosystem. And actually, something that we've been really focused on, and Jensen actually said something the other day about this as well, is we're not just talking about where we are right now with AI. We're talking about an AI to quantum continuum, right? We're talking about this continued acceleration and where we're going to see and continue to prove it, right? So even if it's that you're thinking, okay, well, what if some costs come down, or what if the power needs come down? Well, the demand elasticity is just so strong that for every little bit of efficiency you gain, you're going to gain some extra demand that's going to drive a next new evolution. So we're really looking at this as a continuum, and investing through that type of disruption, I mean, it's not easy. It's not without tension. So while there's tons of opportunity, we are flagging, we've talked about this previously, about this potential tension that can come with that. In 2026, we're seeing over the last few weeks, we get a lot of pullbacks, right? We see a lot of optimism. What we're seeing is investors, fear of missing out, right? Really wanting the innovation, but also every now and then pivoting to a risk off. And that tension is something that we think is going to persist through 2026.
So ride the volatility, expect the volatility. When you're thinking about the fundamental analysis, only briefly, look, Michael Burry basically having to shut up shop in his hedge fund, it would seem the reporting is leading us there, on his negative bets on some of these companies. You think it's impossible, briefly?
Well, I mean, nothing's impossible,
yeah.
Right? And yes, it does make for good dinner side conversations. What we're looking, and the way we approach this is we look very much at the theme holistically, right? It's one of the reasons why we say picking single individual winners and losers is really tough when you're talking about investing through disruption. We really look at benchmark indices. That's one of the reasons why, you know, the way we create our work is very much looking at that benchmark approach, understanding that as these systems evolve, you're going to find new connections, new correlations, and that's really a way to continue investing through disruption without that vulnerability.